This is video 6 of SciCat Limited combining debentures of IFRS 9 with IAS 8. We have already looked at what was done, what should have been done, and we've looked at the differences. We have started to look at the note and we are now continuing with that. So the first column we need to look at is the opening balance of the comparative year. When we look at that column, it is really important to understand that you are working with balances. Now, the first part of your prior period error note is about splotchy items. These items do not have opening balances because they are closed off and taken to retained earnings. So if you look at the column opening balance of your comparative year, you cannot include amounts at that top part of your note that deals with the splotchy items because they don't have opening balances. If you do include amounts there, we will negative mark you because it is a mistake you are making, a principal big mistake. There cannot be amounts there. So where can there be amounts? There can be amounts at the SFP part of your prior period error note. SFP has got items that have balances. So what are the items in this specific question? It is the debenture asset and then also retained earnings. Now, when we look at the debenture asset, we are looking at the SFP balances. Remember that you have both a current and a non-current portion that will be presented on your SFP. So we already had a look at the difference between current and non-current, between what was done and what should have been done. And we saw that there was no difference in the current portion for 2012, which would be your opening balance of your comparative year, 1 March 2012. There was, however, a difference in the total balance and therefore a difference in the non-current financial asset. If we think about retained earnings, we had a look between what was done and what should have been done. There were differences in 2012. They would have affected the retained earnings closing balance at the end of 2012 and therefore also the retained earnings opening balance in the column we are busy with. Opening balance of your comparative year, 1 March 2012. What was done is that we recognized finance income of 4,000. We should have only recognized finance income of 3,621. Finance income therefore decreased, which would have decreased your profit for the year, which would have decreased your retained earnings at the end of that year, which is now the opening balance of the comparative year. Also, we should have recognized the fair value adjustment, which was an expense, which would have decreased profit for the year, decreased retained earnings closing balance, and therefore decreased the opening balance of retained earnings of your comparative year. The net effect is that your retained earnings opening balance is decreased net with 2,103 Rand. If we now look at the current year, I apologize, not the current year. I apologize. Please don't put the current year in. If we look at the comparative year, not current, please, comparative year, the 2013 year. Now we can show both the splotchy items as well as the SFP items because our comparative year, on the face of those financial statements, in our comparative year, you will see splotchy items and statement of financial position items. Remember, the opening balance of the comparative year is only an SFP item. that gets added when we do IAS 8. But if we look at your comparative year 2013, you will show the effect on every single line item. That includes SPLOCky items as well as SFP items. So if we start with the SPLOCky items, the first item that is affected is finance income. Now, there's a difference between what was done and what should have been done in 2013. We need to say whether it's an increase or a decrease. Finance income had to decrease. That is a decrease in profit for the year as well. That is why it's in brackets. And you also need to show those line items. Decrease in profit for the year and total comprehensive income. If we then go over to the SFP part of the note, what items are affected? Well, the first one is your debenture asset, the investment. So there's a difference in the total balance between what was done and what should have been done. The total balance at the end of the comparative year 2013 is different, but you need to split that total balance between current and non-current. However, at the end of 2013, we know that the entire investment will mature in 2014 with the last and third installment. So in an SFP, even if it had no IAS 8 implication, in an SFP, this entire investment would have been under current assets because it is redeemed within the next 12 months. So even though there's a difference between what was done and what should have been done, there's a difference in your total balance. You will have no amount next to the long-term portion, the non-current, because the entire investment is lying under current, under short term. So any difference in the total balance has to be a difference in the current asset. The last item we need to look at is retained earnings. Now, it is really important to understand that you are busy with the SFP items in the prior period error note, and that SFP items have balances, and that balances are cumulative in nature. So when you look at the decrease in retained earnings, the amount is not equal to the change that was there for the current year in the profit of 2013, in the SPLOCky items of 2013, because if we look at retained earnings, this is a cumulative item. It therefore takes into account everything that has happened at any point. So it takes into account what was changed in retained earnings opening balance as well as what was changed in retained earnings for the year, which is the profit for the year. It takes everything into account. We are looking at cumulative effects. The SPLOCky is the period specific effect. That is period specific, one period. Retained earnings is a balance. A balance is cumulative. It cannot show only the change of the current period. It needs to show the effect of all changes due to correcting this prior period error. Everything together cumulatively.